Hello there, this is James, and you're watching Tixee Live. And a very good afternoon to all of you, and all of you a very happy Tuesday. In today's program, I want to have a quick discussion about the US dollar and its fight back, something we talked about on Friday. Plus, I want to ask the question, which I've spoken about this before, but I really want to have an open conversation about this, whether or not the US are on the brink of a brand new crisis. Anyway, before we get to that, though, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So, on Friday, I don't know if you can remember, I was discussing the fact that I could start to see the good old Greenback beginning to fight back against the majors. And today, we can see that properly happening as we speak. In fact, the US dollar has actually hit a 3-week high. What I mean by that is the US dollar index has hit a 3-week high. Now, those who are new to trading, the dollar index measures the strength of the dollar against 6 other major currencies, including the euro, sterling, Aussie dollar, Japanese yen, etc. And actually, the dollar index has risen to levels not seen since July the 27th. Now, don't forget, those of you who were kind enough to join me for the US CPI, we saw a big rally in the market. We saw a lot of dollar weakness across the board. Basically, what we're seeing now, though, is the dollar fighting back. And basically, in a nutshell, the dollar has basically recovered majorities of its losses. And we'll have a look at that. I'll bring the charts up in a minute for us to have a look at. And the reason for this is, like I said last week, the market is beginning to think that the Fed will indeed be aggressive with interest rates. And there is a concern that despite the very good job data we had, not last week, but the week before, the fact that we are seeing seeing inflation slowly reducing a little bit. Remember, it's still 8.5%, which is still high. There is a little bit of a feeling slipping into the market of we are going to be going into a recession. So this is why we're seeing the dollar strength. And this is why we're seeing dollar actually being driven by desire for a safe haven. So yeah, safe haven status is beginning to kick in with the US dollar. So let's have a quick look at it now. So give me 2 seconds. Let's have a quick look at it. This is the dollar yen. Okay, it's on a daily chart. Currently trading at 134.42. Don't forget, this is the candle here where the US CPI came in better or lower than anticipated. And like I say, basically the dollar is on its way back to recover all its losses against the Japanese yen. If we look at the euro, very similar story as well. This was the candle where the euro gained strength against the greenback on the back of that CPI, and obviously now basically it's wiped out all the losses it had against a single currency. If we look at the sterling, same story again with the sterling. This was the candle when the CPI came out last week, and we had dollar weakness. As we can see now, the safe haven status of the greenback is shining bright and it's beginning to fight back. It's currently trading against the sterling 129.0. That's a key level right there for the sterling, 1.20034. A very key area of interest there. So yeah, if we have a look at gold as well, gold's very same story again. All the gains it made against the greenback on the back of the CPI is now being reduced and is currently trading at $1,774. So yes, that's what we're seeing with that. So the greenback is indeed fighting back as we talk at the moment. Again, because, sorry, my throat's a bit dry. Again, because the market is looking for something, is looking for a safe haven. So this is why it's shining bright. And this is also helped on about the fact that why is a safe haven? Why is there concern? Well, as those of you who were kind enough to join me this morning, remember I mentioned about new house starts for the US? And we're beginning to see signs now. We are beginning to see signs of high mortgage rates beginning to bite the US housing market. You know, like I said this morning, with the increase of interest rates makes mortgages far more expensive for the consumer. And we are beginning to see this hit the housing market in the US. New house starts. Now, don't forget, this is the number of new properties being built first time for new households, so household homes, okay? It actually was announced at 1.446 million versus the expected number of 1.540. That's actually a 9.2% decrease from the previous month. And it's the lowest level since 2021 when we were in lockdown. So there is a beginning to show signs that the property market in the US is being affected by higher interest rates, okay? So there is a slowdown on this. Don't forget, like I mentioned previously, float's really dry. As I mentioned previously, okay, don't forget the 2008 credit crisis was caused by what? The housing market in the US collapsing. Not saying we're going to have the same sort of experience right now or that, but clearly this is evidence that, you know, despite all the good job data and all this, etc., signs of inflation is cooling a little bit. We got a bigger problem down the road coming. So I think this is a story waiting to happen and waiting to explode. On some good news, though. Let's do some good news for a change, James. I always seem to be pretty bearish and pretty doom and gloom, don't I? But anyway, we have some good news today as well. Walmart surprises the market. They announced their earnings today, okay, and it came in better than anticipated, 152.86 billion versus the expected number, 150.81 billion. That's actually an increase of 84%, and that is thanks to the purchase of food and other essential items. There, notice I said essential items. There wasn't growth in luxury goods. So it's the essential items. So again, it is showing that the consumer's buying pattern is changing quite considerably. So, you know, anyway, but it's better than anticipated. Because Walmart 3 weeks ago did downgrade their forecast of their earnings. So they did warn the market they weren't expecting good numbers, but it has come in slightly better than expected. Inventories wise, okay, they actually reported 59.92 billion at the end of the second quarter of their inventories. That's 25% more than this time last year. So they've still got plenty of stock, which is not being bought by the US consumer. So that is slightly worrying as well. However, the CEO, John David Rainey, he said, I think it's going to take another quarter, maybe to get into the fourth quarter a little bit, to get to where we want to be for our overall inventory perspective. So there we go. So like I say, it's better news, better than anticipated, but it doesn't paint a complete rosy picture either. Now let's have a quick look at Walmart, because it actually has opened up higher on the back of the better than expected revenue earnings. So let's pull it up quickly. Let's pull it up. Give me a second. Where have I put it? And already. Oh, here it is. Yeah, there we go. As we can see, this is on a daily. So we'll bring it on to 30 minutes so we can see actually how dramatic it opened with a gap. It closed yesterday under a key level of $133.36. It's now currently trading $140.04. So it is benefiting from the better than expected earnings report, which did surprise the market slightly. Target and other Costco are also benefiting as well, because now the market is anticipating that maybe these retailers aren't going to give us such a gloomy picture like we all thought they were going to. So that's where we stand with that at the moment. In other news, oil remains under pressure. At the moment. Don't forget, we have signs, okay, so all about a demand issue, not a supply issue now with oil. We have signs of China's economy beginning to slow. Don't forget, China's central bank yesterday surprised the market and cut interest rates to try and revive the China economy. And obviously, this is down to their slowdown of A, the property crisis they have at the moment, and B, their zero COVID policy, which they've been in lockdown for quite a long time. So this is worrying the oil markets, or the oil bulls, so to speak. As well as that, there is progress. Currently, there's progress apparently with the 2015 Iran nuclear deal. If this goes through, then of course Iran will be allowed to start selling oil on the global markets, which of course will increase supply as well. Let's have a quick look at oil as well. Let's have a quick look-see. Where is it? Let's have a look. Here we go. So it's WTI, of course, currently trading $88.83, below that key area of interest of $89.54. And with Brent as well, let's have a look at Brent, currently trading, okay, at $94.33. So we are seeing oil under pressure again. Like I've mentioned, this is a demand issue, not a supply issue. So this is where we're seeing oil at the moment. What else has happened? What else has happened today? Let's talk about inflation again. We didn't talk about inflation enough, do we? Yes, of course we do. Canadian inflation came in today at 7.6%, as it was expected, down from the previous number, which was 8.1%. Okay, 8.1%. So there is a little bit of hints that inflation may have peaked. But like I say, that's still 7.6%. That's still high. And don't forget, the Bank of Canada, like the Fed, like the Bank of England, their target is 2%. So don't forget that. We're still miles away from our target when it comes to inflation. All right, other major events to come. Don't forget, we have the big one tomorrow, or two big ones, in my personal opinion. We have the UK, we have the UK CPI. Be interesting to see if it does in fact hit double digits. EU GDP, US retail sales, and the big one, the FOMC minutes. That's happening tomorrow. We also have EU CPI to come, initial claims, and UK retail sales. But the big one, there's two in particular I'm going to be really fascinated with. One will be the UK CPI, due tomorrow at 6 a.m. UTC. Expectations to be 9.8. Will it come in at double digits? A lot of analysts think it could go into double digits tomorrow. Don't forget, the Bank of England expects inflation to hit 13.3% come October. So that's going to be a big one. But really, for me, it's going to be the FOMC, the minutes tomorrow night, which I will do a special. I will do a watch along. I'll be doing it from my home because it's quite late at night. But I still want to watch this event with you good people. On other news and other things, yes, Friday. Don't forget, Friday. Another big event's happening. And that is going to be our brand new tixee Live series, #AskJames. But don't forget, this is a new series. Okay, we do at the moment the tixee Live broadcasts like this, where we discuss the markets. We do tixee Live watch along, where we watch the live events together. And now we've got a new one called #AskJames. This series, again, will be live, because live means live, but it will focus on education, and it will focus on a topic of your choice. Simply leave in the comments below, #AskJames, and a topic you want to learn, and we'll dedicate a live video just to that topic. This Friday, a suggestion by SMF 790, a regular viewer, and they would like us to do a video on market jargon. And I'm going to do a special video on explaining market jargon this week. Next week, I'll do another episode by another suggestion by Jay Davis, which is candlesticks, but I need more topics. So please share with me, what would you like to learn and what you'd like to talk about? The market, as it currently stands, the FTSE is currently trading 0.22% higher. DAX is currently trading 0.19% higher. And Eurostoxx 50 is currently trading at negative 0.24% downwards. So don't forget, you can talk to me anytime you wish, or simply say hello if you like. Or share me your opinions. Let me know what you think about the market. What do you think about the US housing market? Do you think we're about to approach a new crisis? Are you surprised that the dollar has fought back already? Or, you know, like I get saying, Hello, Philip. Good to see you, buddy. James, can you give us a market update when United will get their first win? Oh, Lord. That's a really good question, bud. Trust me, I can understand the markets a lot more than I can understand how Man United are playing at the moment. I tell you that. I don't know, bud. And I don't think it's going to be this Monday coming, because that's Liverpool. I don't think it's going to be this Monday. So hopefully after that game, and hopefully that game, and the next game we play, the other team doesn't show up, so we win automatically. That's the only way I can see us winning at the moment. Great to see you, by the way, Philip. Really great to see you. Really good to see you, mate. Really good to see you. Is there anything else, any other questions, or anybody else wants to share in mine and Philip's misery? Because we're both Man United fans. And yeah, and they're not doing so well at the moment. Not at all. But never mind. Never mind. But anyway, great to speak to you, Philip. Any other questions? Anybody else like to ask me anything else at all? No? Don't forget, if you think of a question later, it can be about Man United if you like. If you think of a question later, put it in the comments below, either Facebook and YouTube. I will see them and I will reply to the question next time I go live. So do bear that in mind. Philip, that's a good point. U.S. housing to continue to crash. Recession is. Look, I'm a big thing about this. I used to be in mortgages, surprisingly, years ago. Years and years ago, when I first started out in the financial service industry. I take a big interest in the housing industry because when you start seeing a big slowdown in it, then it is indicating that obviously the rest of the economy is going to start struggling. So I think the fact that nobody's talking about this a lot at the moment, the market's not really noticing this at the moment. They're aware of it, but they're not talking about this. I think you're right. I think if this continues to crash, and the way we see it developing at the moment, then yes, recession is definitely on its way. So I would agree with you on that, Philip. Definitely, bud. I definitely would agree with you on that. Yeah, but I really think, I think you're right. And I think Canada's a similar one as well. Canada's struggling. And the UK, we have a big housing market in the UK as well. So with inflation as well, yeah, it's a story waiting to happen. It's a story waiting to happen. Yeah, what's your inflation at the moment? Was 6.1%. Interest rates again. What is it? It's what's it now? 175, I think, isn't it, in Australia? Like I say, again, it all happens. No, it won't be as dramatic. It won't be not as drastic. It won't be, no. It won't be as drastic as the US. But there's that old saying, US sneezes and the whole world catches a cold. So this will have an impact to everybody. But you're absolutely right. Absolutely right. Totally right about that. You're on the money then. Totally on the money there, in my opinion. Totally. Anybody else? What does anybody else think? Does anybody else agree with me and Philip on this? Or do you have your own opinions on this situation? Don't be shy. Give it a try, as they say. Okay, like I say, though, if you think of a question later, guys, put it in the comments section, either Facebook and YouTube, and I will reply to them next time I'm online. And don't forget, I'm back online again tomorrow at 8 a.m. James, what is your thoughts on investing in shares at the moment? Any shares in particular? Any shares in particular? Look, this is my thoughts on several shares at the moment. The retail market, like I say, the fact that again, this is an opinion, this is a view, this is not to be taken as financial advice, obviously. The retail shares at the moment seem to be performing quite better, and the earnings in general this year, it's just like this quarter, has been better than a lot of people are anticipating. But my concern is this, okay? Again, it's something which is beginning to trickle through. The likes of Apple are performing very well. The likes of Google are performing very well. The likes of Tesla are performing very, very well. However, there is signs of them starting to not hire as many people and start to do job cuts, which indicates to me that these companies, these big firms are beginning to get concerned of the state of the economy. So we might start seeing them drop off. So I would be very, very, very cautious with shares at the moment. I would probably start looking more at potential safe havens in the coming months. Not right now because the market hasn't woken up to the reality of this yet. But in the future, I'll be start looking at safe havens, certainly. And I do still think that, like I said, we've had a bull run in equities at the moment. I think it's still a bear market because I think people are pretending that the Fed's not going to be aggressive with interest rates. They're fooling themselves, and I'm sure the Fed is going to be aggressive. A great question, Philip. Great question as always, mate. Really, really good. Like I say, don't forget, I'm back online again tomorrow at 8 a.m. UTC. And then again after that at 2 p.m. UTC to cover US session. And then from my home, I will be online again at 6 p.m. UTC, to talk about the FOMC. I would go mining. Tech, for example, like I say, the likes of Apple and Tesla, they've done very well. The earnings have done well. Okay, but I would be a bit concerned about them because they are starting to talk about not hiring people. Okay, so I'll be concerned about them at some point turning around. Mining, okay, commodities, yes, I'm a gold bug, as you know, so I would possibly be looking at gold, definitely at some point. Copper, at some point when it hits its lows, don't forget copper, the industrial metal. Once we sort of get over this recessionary period, which again, if it's UK, they reckon it's going to be 5 quarters, that will have a turnaround down the low. But again, that I can see that struggling. Obviously, the energy market, gas in particular, it's European gas, that is not US gas. That is looking interesting as well, because obviously we're going to have an energy crisis in the winter. And retail, I'd be nervous at retail in the long term. Really, they're going to drop 25 points. What, sometime next year? Is that what they're thinking? I know, look, the Fed has said that as well. They said, a lot of people have said the Fed's going to do that by the second quarter of next year, but there's no way they're going to get inflation down to 2% by then. It's like the UK, for example, they don't want to get inflation down to 2% since 2025. So the fact the Bank of England will start reducing rates next year, I don't know. I question that. But like I say, it is possible. It is possible if we start seeing the slowdown again. Next month, really? Is that what they think? That's interesting. I haven't read that, to be honest. I haven't read that. Drop it by 25 points from the previous 50 rate. Well, that's the thing. That seems to be quite surprising for them to do. I mean, China surprised it. They did that yesterday, didn't they? So it's not completely out of the question that they could do that. But yeah, maybe. I don't know. I don't know, to be honest, what the economists are thinking. I'd be surprised that they did that. Whether the Fed will start doing that, no chance, in my opinion. Not to maybe the third quarter next year if they start seeing a slowdown, definitely. But as I say, I don't know about that. No, Philip, don't say sorry. This is brilliant. This is fantastic, my friend. I love the interaction. I really do. So I know I'm really, really, really appreciative of your interaction, mate. And it's great. It's fantastic to see you again. It really is. So thank you, mate. And like I said, we're both living in misery at the moment as we're both United fans. Anyway, as I was saying, so back on again 3 times tomorrow. The FOMC would be interesting. But anyway, till next time, don't forget these. Forgot my first bit. Okay, here's another question. That's a good question. I think the housing market is slowing and unemployment rates increasing. How can they not see these early warning signs of a recession coming? They can see it. They think the labor market, I'm talking about the US here, and the UK in some ways today, because the UK job data was mixed. It wasn't awful. It's still 3.8% unemployment. We've still got slightly signs of it slowing down, though. Claimant count was 10,000 negative. They wanted 32,000 negative. So the UK is beginning to slow. The Fed believes their job market is really, really strong. 3.5% unemployment. NFP number came at 528. So they don't see it like that. The Fed are looking at it as a strong labor market. This is why they're not looking at the house starts at the moment. They don't think like that at the moment, but they may have to start looking at it at some point. When the labor market starts to really struggle, we're seeing key signs in that, not just the initial claims. I know I look at the initial claims a lot, but when the labor market starts, then they cannot deny that we're potentially going into a danger zone. But great to see you as well, by the way, and great question. Anyway, as I was saying, don't forget, if you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube, and what's another question? Oh, dear. So you're living in misery like me then. We're all 3 of us are United fans. Oh, well. Yeah, no, Monday, forget about Monday. That's when we face Liverpool. I'm not looking forward to that at all. My pleasure. It's good to see you again. It's really good to see you. And thank you for the interaction. Lord help us all. Absolutely, Eric. Absolutely, Philip. I mean, totally. Couldn't. I was thinking Eric Van. No, totally agree with you. I'm not looking forward to that one bit at all. Anywho, like I say, if you're watching me on Facebook and you enjoyed this little episode, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video and you enjoyed it and you found it useful and you put up with me, my over-the-top enthusiasm for the markets, just give me one of those. It's nice to know that you like what I do. And Philip, I couldn't That's what I said the other day. I totally believe that. The bigger the ship, the wider the turning circle. Let's hope I'm right. I'm right. Anyway, big shout out, massive shout out to Philip, massive shout out to SMF 790. Thank you for coming along and interacting. Great questions as always, Philip. Great questions as well, SMF 790. Really appreciate you guys taking the time out to have a chat to me about the markets. And I appreciate every single one of you for coming along to watch me today. I really, really appreciate it. Everything. Anyway, till next time, don't forget these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.